Hello, good afternoon, and welcome to the Moneytree Mastery Property Show, broadcast live here. Usually bang on 12:30, but today we're running a little bit late, so it's a show full of no fluff, real up-to-date stories, real up-to-date news, and everything that's going on in the world of property and the lending market. So today's show, we're going to cover off. We're going to give a little insight into what's going on with our new program called Nab An Investor, which has been received extremely well, and we're very proud of it. And the content is phenomenal. The value is even greater. So we're going to give an overview on that and let you know how it's going. And also, we're going to take a look at flips and the time scale it takes, and what do you need to sort of put in as a contingency for cost of money. So we're going to do a little bit of an overview on that, and also we're going to have some real live up-to-date news to share with you. So that's what we've got on today's show.
Yeah, I'll be going over actually answering some questions that we have had come in this week. We've spent a lot of time with people who are just starting out in property
And
and
a lot of chats with our mentees as well.
a lot of questions. So we'll be going over and answering some questions live on air. So if you have any questions, please pop them into the chat and we will do our best to answer them live on the show. So, Mr. D,
Hello.
hello. We've had a very busy week, but
We have
anything new in your world? I know that you've been spending some time with your business partner, not just me this week.
not just you, no, my business husband. So yeah, so we've been targeting a new area with a view to implement a new strategy. Actually, new for us. It's not new to the world of property, but we've discovered a really good area that will work for social housing. So we're going to sort of try and create really nice homes for the more sort of vulnerable, if you like, in society. And yeah, we're sort of part of a mission. We're linked on part of a mission that a good friend of ours, Dylan Denetcher, has got to house 10,000 vulnerable people by 2027. So we're going to come to the party and try and acquire some houses and then put them out to the likes of the social housing providers. So had a really good time, spent all day yesterday viewing properties and meeting agents. And there's always one agent that looks down on you and doesn't think that you're serious. But we met some really good agents that took us very seriously, and we've already followed up this morning. So yeah, great day, and lots of opportunity, I think, in that particular area.
Amazing.
What about you? What have you been up to?
Oh, well, I've just had my head buried in my laptop, really. The Nab An Investor, I just think that's just on my mind, growing that, making that a lot better. Just on the dog walk this morning, more ideas coming in of how we can actually make that into a real big, yeah, product, real learning center. So yeah, so I'm really excited about it. But yeah, I'll tell you more later on in the show.
Yeah, and we were a bit late up this morning.
Yes.
We had our in-person networking event that happens the last Wednesday of every month here in Colchester, and the turnout was phenomenal. It was a great vibe in the room, and yeah, lots of great questions, lots of great shares, and generally just a real great community.
Yeah, they are lovely people, so I keep fiddling and making sure everything's working. Um, yeah, but do you know what's really annoying
No,
is that it's always lastminute.com.
yeah,
In the morning, we think no one's going to turn up, and we put all this effort into advertising it, and then we have like 30 people show up in the evening, and it's it's really
and the
frustrating.
frustrating thing is as well, we provide food, so we provide a buffet, so it's difficult to cater if you don't know how many people are coming, but it all works out in the end.
It does.
Yeah,
It does, but you just think, oh my God, no one's interested, no one wants to come.
it's too
And then
hot. Yeah,
and then loads of people turn up. Yeah. So if you are watching and you go to networking events, just so that you can take a little bit of stress off your networking host, can you please register at least 48
yeah,
hours beforehand? It would be really nice for us to know that you're intending in coming rather than just waiting until the afternoon and then booking a ticket, because it does cause a little bit of stress and anxiety. Just putting it
it
out there.
does.
It would be really nice if you could do that. for me and all the other networking hosts out there. That'd be brilliant.
Marvellous, marvellous.
So lots of stuff going on in the news this week.
There's not a huge amount. The market's gone a bit dead. So there's some really good facts and figures, though, that are kicking about, which are somewhat shocking, some of them. So interest-only mortgages are on a massive decline, according to the UK finance company. Interest-only loans fell by 541,000, which is an 18% decline compared to 2023 in 2024. 18% decline. So these brokers, these finance companies are going to have to sharpen their pencil and reduce some rates, aren't they? Kickstart the market.
But that's what they do, though, isn't it?
Yeah, they control the level of business they get by moving the rates around and the products they're using. And this is quite an interesting fact as well. 1 in 20 homes listed for sale are now priced in excess of £1 million, which is 103% rise in such listings between Jan and April this year. So 103% rise of listings of £1 million or more between Jan and April. So is that, I mean, that could be a sign of the, the economy. Are people struggling to maintain that sort of property? Although £1 million now is nowhere near like £1 million was 10 years ago.
Let's go to London.
But it's quite interesting why the market is flooded with those properties. We've got a close relationship with an agent that deals predominantly in properties of £750,000 and above. And we had a discussion with him, and he's actually noticed that he's having to reduce them quite dramatically to get any interest. So he's listing them at what their, what is their true value? True value is what someone's willing to pay for it. But their perceived true value they're being listed at, but actually they have to reduce them. He's having to reduce them quite significantly, and talk the vendors round into being realistic. So that market is slowed, obviously, which normally it's outside the financial crisis, etc., isn't it? The people that live in those sort of properties, and it's interesting.
I just find the whole sort of market analysis really interesting, because we're in the mix and we're always speaking, and we're always speaking to agents, and we're speaking to the salespeople, but we're also talking to like newbies in property, people that have been in property for a long time, and it's quite interesting, the conversations that we have. And I've noticed just recently the strategy that seems to be the hot topic at the moment is flips.
It is, yeah.
And that's quite interesting. It's moved, used to be service accommodation the whole time, and now it's moving to flips.
Well, let's be honest, the rent to service accommodation and the rent to HMO are really difficult to get the numbers to work now. So, strategies come and go, don't they? That really work. It's all about the market, what's working at any one time. But interesting, you should say that overall house prices fell 2.7% month on month, with the average house price falling in excess of £7,000.
That's a huge amount.
So that's a big amount. This is directly attributed to the stamp duty land tax increase, obviously. But interestingly enough, the London market's gone the other way. That's gone up 2.6% month on month. So why is that?
So London's just like a whole
It's a whole market of its own, an economy of its own. But why would house prices in London go up, more or less the same amount that the rest of the UK's declined?
Demand, I suppose. People moving back into the city.
It's all about demand, isn't it?
Everybody moved out of the city, and that caused all the house prices to drop. And now they're all moving back in.
Yeah, it could be a turnaround after COVID, where everyone was moving out and looking for some open space and a bit of room around them, and now they're sort of gradually seeping back into what they were used to years ago.
Might be that
it is years ago now.
I know. Or companies are now insisting that people actually stop working from home and go back into the office. Yes. So they're looking for places to be nearer work.
Yeah, potentially.
So lots of reasons. So this is what I find quite interesting, actually, what what drives human nature. So if businesses are demanding now that you work from the office, then where before it was work from home, so people had the luxury and the flexibility of moving wherever they wanted. But now the demands are the opposite, that they have to go back for working in an office environment, then naturally people are going to move closer to where work is. So
yeah, there's a lot of people I sort of rub shoulders with working from home. They have to go into the office perhaps 1 day a week. So commuting 1 day a week is not a big hardship, is it? But if you're doing it day in, day out, you want to be nearer.
So give us your comments. Tell us what you think's driving this shift now with the increase in the house prices in London. It's just really, it's just very interesting. This is where you start to really understand what starts to give those ups and downs in the property market. Cool.
So flips.
Yeah, let's talk about flips. So it seems it's the real buzz. We're still 100% buy-to-lets us. Buy-to-lets, regular income.
We do flips.
Oh yeah, but ours aren't. Our
bread
business,
butter,
our bread and butter is buy-to-lets. But we have flipped. We have sold a few properties. We've got a few up for sale now. But yeah, well, every strategy has its pro and its con, doesn't it? But flip definitely is a conversation that we're having a lot with our mentees, and just I've noticed that's a discussion topic a lot.
I've just come off a Zoom actually with someone who's in the process of securing a deal for a flip, and people don't understand the length of time it takes.
Yeah, I think that's what I really wanted to discuss was, I mean, in the word flip, even in that word, suggests that it's like literally super quick because it's a flip. We're actually doing a piece in a couple of weeks for Assets for Life, all about buy-to-lets and flips. So that's going to be like nuts and bolts, proper nitty-gritty stuff. But yeah, I really just wanted to discuss, the pros and the cons of a flip compared with a buy-to-let, because I'm seeing that because of all the changes in the Renters' Rights Bill, that's causing obviously a lot of houses to go onto sale, and causing people to shy away from having tenants as well, having those rental properties. So now this is my thought. That's why people now, the strategy is flips. They've got this idea that they, can buy a property, do something with it to increase its value, and then get it back on the market and make, you're going to make some good money out of flips. There is no argument against that, but it's the speed for me. It's a bit of a roller coaster, flips. They are very emotional.
It is. I mean, and people underestimate the length of time, and they don't they envisage that everything's going to go exactly according to plan, and let's face it, nearly 40% of all properties sold subject to contract these days fall through. So that's nearly, that's over a third of all properties that go sold subject to contract. The first deal falls through. So you need to bear in mind that could happen when you're selling, marketing your flip. And so I've just come off a call with someone. They thought they could buy, refurb and sell within 3 months, which is obviously totally unrealistic. But when I said to them, your cost of money, if you're bridging, is going to be about 20k. It's going to take you probably minimum 9 months, and that's if it goes smoothly, because you've got to buy it. You then got to do the refurb, and it's a full refurb, so it's kitchen, bathroom, rewiring, the whole heating system, the whole lot. So again, realistically, 12 to 16 weeks to get that done. Then you've got to market it. And even assuming you accept an offer in the first week, you've then got, do you know what the average time is for conveyancing now?
Well, it used to be 4 months, but it's probably increased.
It's 16 to 20 weeks now is the average time it takes for conveyancing.
Nearly 5 months.
Yeah.
It's mental.
Yeah. So, and people are taking out bridging loans for 6 months thinking they're going to turn around a flip in that time, and they're not. So you know, our advice is always, it doesn't cost you anymore. Take it over 12 months. At least you've got a bit of contingency there. Because the exit fees are the same whether you exit at month 6 or month 11. So it's quite incredible that people that get into property that don't understand the process is scary, I think.
Well, that's why they come and see people like us, isn't it?
It is, yeah, this is morning. But yeah, so you know, you've got cost of money, 20 grand. They also hadn't factored in, they'd factored in the buying fees and the stamp duty, but they hadn't factored in the conveyancing and the agent's fees on the exit. So all this eats away at profit. This is a fairly low priced property you're referring to. So he's buying it at 220. And you know, he budgeted, I think, £38,000 profit on his flip. And by the time he'd finished the call, he'd got about 17 grand left because his numbers were so far out, or his timing was, you know, time scale.
And it is, the timing is what eats away. One thing we always suggest is not to go for best price on a flip. You go for speed of sale. That is, the speed of sale is absolutely crucial, not to hold out for best price, because best price just eats into your profit. Where you just want to sell it, get all your money out so you can go again, because that's going to hold up your next project. We actually see it one up the road from here. We wonder if it's been so long. There's a bungalow near us that has been, you can see slowly things are starting to happen, but there's definitely no speed behind it, is there?
Which one are we talking about? As in the build, or?
Well, it was a bungalow, and then we saw that trees had been cut down, and then we saw fencing had gone up. And
see, I know the reasoning behind that, because I know the company involved, and basically they've built or refurbished quite an extended 2 bungalows, and they're holding out for best price. They're not selling.
And then it stops the next project.
So the next project's on hold. So again, it's the speed. If you want to take 10, 15 grand less and get on with the next project, so you're you know, taking a slightly smaller chunks out from as a profit point of view, but you're getting more of them.
Yeah, that's the thing. And you've got holding costs as well whilst you're waiting for sale. So you've got council tax.
Double if you're not careful.
Yeah, gas, electricity, insurance. And insurance on an empty property is double what you'd pay for an occupied property. And if your property is empty after the refurb for over 12 months, then you'll start to get charged double council tax as well. So all your costs start to escalate after 12 months.
If you borrowed against it as well, your cost of money is just escalating.
Yeah. So flips are great, but just really be
contingent,
sensible about timelines and the what ifs. Because we sold a property last year, it took 14 months in the end, on a bridging. And you can extend your bridging. Obviously, you have to request to extend it. But then, you know, you've still got those monthly payments that you have to make. And yeah, so, you know, the possibilities to extend bridging obviously are there, but it's the cost of the delays, which really eats into your profit.
Yeah, we had someone that we went through sort of 8-9 weeks conveyancing, and they pulled out. So nothing's guaranteed until until you've got those contracts exchanged. So then you have to start the whole process again. So you lose 3 months, and you've got 3 months cost of bridging. Eats into your profit. So
yeah, so they're not as speedy as people think, but still great.
Oh yeah.
Personally, I would bolster up your sort of income with flips, not make it your main income goal.
Not your main strategy.
Yeah, not your main strategy, but it's a way of obviously getting some nice chunky money back into the business, whether it's to pay investors off, because you may have found along the way, if you're doing rentals and refinances, that potentially your refinances have been undervalued, so you've maybe had to leave 10 or 15,000 in. So to bolster up those investor pots, do like sort of have a strategy where you do so many buy to let, so many rentals, where you've refurb them and increase the value of the property. Then maybe for every 4 do a flip, and then you've got that contingency, that pot of money for any deficits that you've had in remortgaging. So that might be an idea just to think along those lines.
Perfect.
Cool. So yeah, so that was really interesting how flips now are seems to be the main strategy. But I've had questions this week.
That may be, just very quickly, that may be because in April, more than 100,000 properties listed for sale were reduced in price. So people are obviously thinking that motivate sellers.
Yeah.
So they'll take an offer.
It's
So there's
definitely
more profit in them.
well, we know that sales have dropped, so it's
Yeah.
definitely a buyer's market. So all these things, but yeah, it's about speed, really. Speed for me. For buy to lets, you can pretty much guarantee the timeline as long as the demand is there for your tenant at the end. You know who is going to go into your property, you know who your client is going to be, then obviously, you know, that for me is far more guaranteed outcome as much as you can guarantee.
It's small delays on the refurb. But
Yeah, but you're not relying on a sale. It's you're in more control of what you actually or what happens to that property or if you're doing a buy refurb refinance. Cool. Other questions that I've had this week, because I have had a lot of conversations with people. This is off the back of Nab An Investor, our brand new product. I'm going to keep talking about this because I'm super proud of it. It's very exciting what it's going to actually bring. Somebody was talking to me about asking lots and lots of questions. I was being bombarded, question after question after question. Exhausting. I felt like I needed to have a lie down at the end of the call, but really good. It was really, really good. And I was being asked about leveraging properties too high. So I'd just like your opinion really on leveraging a property.
or borrowing too much against them, you mean?
Yeah. And then also then it moved onto the conversation of paying down mortgages. So I'd just really like your opinion on that.
Well, obviously we utilize other people's money for our deals. So our goal is to get their money back out on the refinance. So with that in mind, what we do is we take the maximum we need, loan to value, to get their money out. So if we could get it out with 65% loan to value, that's what we take. If we need to take 75% loan to value to get their money out, that's what we take. But as far as paying it down, our strategy is on the refinance. So say we've done a whole term on a 5-year product, say, on the refinance of that, or the product switch of that lending, we'd borrow the same amount again. We wouldn't take cash out. So we wouldn't be looking to raise money every time we refinance. So basically what you're doing is your loan to value is getting smaller each time you refinance, and also we put our rents up year on year, so we're getting a pay rise every year, and in effect we're paying down the mortgage because the loan to value is decreasing. So there's more equity in the property, and 5 years is a good time span to sort of gauge what the capital growth is, and yeah, it works really well, I think. So across our portfolio, I think we're around about 52% loan to value, aren't we?
Yeah. Yeah, I just thought it was a really good question because there's people who are in our circles that like to pay down their mortgages. They've got to a certain stage in their portfolio where they can actually just use their rental to pay down the mortgages. They're not
living.
No, they're not using the rental money for lifestyle. So basically, it's just like a self-funding pot of money that they're just leaving it at. They're not drawing on any capital appreciation. They're just leaving the mortgages at the original loan, the original loan value. They're just, as Neil was saying, waiting for the property to appreciate, and then that is what's paying down the mortgage. So you have that difference, as Neil was just saying. But they're using that, then they've got better cash flow and they're using that to pay down their mortgage, which, that's absolutely amazing. But some of you might be starting out where you are wanting that cash flow to actually, improve your lifestyle. But it's maybe you have a goal of when you get to so many properties, you're looking to grow a portfolio, that you then get to the point where you no longer draw on that for lifestyle, but the excess you're then paying down the mortgages. Yeah, that's just a great thing about property, and this is what the amazing thing about property is, that everybody does everything so differently. There's not a hard and fast rule to how you do anything. It's just people's, their own opinions. Very much depends on what drives them. They might want to have this amazing lifestyle and live off, reap the rewards, or it might be legacy planning that they're doing, and that's when they want to have no mortgages and use the excess rent to pay down a mortgage. And then they're all unencumbered and they're left their assets for the next generation. So it's a great thing, so flexible. And this is what I just find so interesting about being property. Stuff I never ever thought we would be discussing or would even know about when we first started in 2018. But it's great. I love it. And then the other thing, obviously, Nab An Investor is a big week in our month. Where people come together, we help people mainly really mindset about using other people's money. It's massive.
Yeah, there's a lot of fear around about that.
Absolutely massive, the mindset about using other people's money, and obviously processes. So if you've got the right mindset, you've got the right processes, there should be nothing stopping you from raising money for your property deals. But the biggest fear is actually getting themselves out there, talking to investors and positioning themselves as a property investor without having any experience in property, which is challenging.
Position themselves as a viable option, really.
Yeah. So, as it's a massive topic, and I'm sure this is going to help so many people. I'm really putting you on the spot here.
Oh, yeah, good.
So I would really like you to talk about, how you would position yourself. You've got no experience in property. You are just starting. You've got to have money to buy property. There's no doubt about that. We know it is possible to raise money without having any property experience because we've done it. But how do you start? How do you actually start with talking to investors?
Well, what you've really got to do is leverage your life experiences already, the things that you've been through, the knowledge you've gained, the jobs that you've done, and basically a lot of skills are transferable especially from our background, because we've been hospitality, we've been customer facing, we've been service providers, so all those skills about how to talk to people and basically how to serve people and treat people how you want to be treated yourself, isn't it? And you gain that sort of like, know and trust model, which is what everything's based on. So again, I think you need to be around people that know what they're doing, because you need to leverage their experience to know how to position yourself. But ultimately, it's getting in front of people and talking to people, telling them what you do. So it's constantly spreading the word about what you do, and always have a pocket pitch, have an investor proposal on you, so you can have an example of the type of deals you're doing. You might not have necessarily done any, but you can do an example of the type of deals you're doing, and we're looking for people to get involved. So again, it's never asking for money, it's enticing people to get involved. So let the numbers do the talking ultimately, and your due diligence shine through, so that you make sure that you've done on your investor proposal, you've laid out the extent that you've gone to cover all bases to make it a secure deal. So yeah, I would certainly always have a pocket pitch on me, something I can present so people can see. So people like to touch and feel something tangible when you're talking about it. So, and also what we've done in the past is we've shared investor proposals with 10 people that we like, know and trust, and ask them for their feedback on it, and then ask them to share it with another 10 people. And before you know it, one of them comes up, it's quite interesting. Can we have a chat about how I get involved? So it is very much sort of bait, isn't it?
Yes,
It's bait.
it is. It is. The other thing about the proposal, I find, is that when you're actually writing it, you realise the stuff that you already know. You think your brain is automatically wired for fear and protecting yourself. So you instantly think on the negative side of things because that's how we're wired. That is how we protect. We're always looking for danger, danger, danger. And so if there's something challenging put in front of us, we're thinking of all the reasons why not to do it. That is an automatic response. But we also learn fear as well. We learn if our environment has been one of no, don't do anything out of the ordinary. Don't make a show of yourself. We all do we not get probably not the right person to tell me not to make a show of myself when I was small, because that didn't really happen.
No, I can imagine. I can imagine.
But yeah, like be quiet, especially in my generation.
When you've spoken to.
Yeah, exactly. You'd go around people's houses, sit and be quiet, that sort of thing. It's not quite like that anymore.
Not allowed in the front room.
Yeah, we have parents of that generation where you'd go around the grandparents and there's one special room. Probably not now. Probably this is the first time many people are hearing this. I know there's probably one person on this call today which has probably experienced the same thing, where the grandparents had the one room which was for special occasions only, and then you never went in there unless it was a Sunday or a party, and then you were allowed in.
Yeah.
But but yeah, we were told as children to not be noticed. Don't make a show. Don't don't embarrass me. All these things. It's all this negativity that we're actually told as children. So we then learn to be those wallflowers, be those people that nobody notices. But in business, you can't be like that. In business, you need to get yourself out there. Hence why Neil and I are doing this, spending time with you for an hour, because we need to get our message out there. We need to tell people what we do, and we really need to shout about it. So yeah, so conversations need to be had, and you need to drive the conversations as well. I'm afraid people are not going to come to you.
It's about being seen and heard, without doubt. Because when we fell into that trap when we first got into property, we didn't share with anyone what we're into, for fear of negative backlash or feedback. So it's not until we really opened up after about 18 months when the magic really happened, where people will really want to get involved. So yeah, get out there from day one.
So the mindset shift, it is probably going to be the most challenging thing that you'll do for raising money. The calls I've had this week is, why would someone want to lend me money? Which is exactly the same thought we had
7 years ago, yeah.
But we managed to raise that first £40,000 off a really awful 2-page document, having no experience whatsoever, not knowing what we were doing, but because the person knew and trusted us implicitly. I can't even say the word. A lot. That's what I'm getting at. What is the word? Steve, please come on and tell me what the word is.
Explicitly.
Explicitly. Is that the word?
I do.
That they lent us the money because the trust was there, and that's what it's all about. If you can show your dedication, your commitment, and they understand your values, your morals, and you are their sort of people, because we attract people just like us, then they will lend you money. And then you just need to back it up, obviously, with supporting evidence, which is that the deal stacks and that you've got the team of people around you that are going to help get it over the line. Yeah, so it's been very interesting. We talk a lot about mindset on these calls, don't we?
So tell us more about the ins and outs of Nab An Investor then.
Oh, it's so exciting. So I'm really loving it. I know. I'm just so loving it so much. So Nab An Investor really came about because obviously we do have a lot of conversations about raising money. And it just seems like an impossible task for people, because it's all right going to these training courses and people tell you to raise money, use other people's money. But then it's like, well, how? Who do I talk to? Where do I find them? you know, there must be a process in place, like, and there's all the what ifs and the how do I's and all of this came up. So, and I'm actually with a an organisation at the moment which is helping us to grow our community online and offline, and they do a weekly challenge called Nab a Client, which is ultimately why we're doing networking and why we're doing community building, is so that we can grow our coaching and our mentoring business. So I was hopping onto their Nab a Client weeks, getting stuff out there on social media and loving it, loving what they do. And I was just thinking to myself, how can we use this? It's like they've got on a massive online community. They've got a membership community as well. They've got like the draw is like a really cheap, like £27 product, which obviously, you know, I'm the one, buy the 27 quid. Then before I know it, I'm on spending some more money with them. Not just monthly, but in growing our business as well. So I was like, this works so well. How can we use it in our business? So I was trying to think of ways of introducing what they were doing. And we've tried doing like a big coaching program on raising money, and it doesn't have enough substance behind it. There's not enough to learn because it is a little bit, it's something that you drip feed into your business, isn't it? It's not something that you need to do all the time. There's not enough sort of bulk behind it. So I just suddenly thought, let's do Nab An Investor, do a week challenge. So every month we meet up for a week. And we just basically talk about mindset, talk about processes, and the challenges for them to actually start writing their investor proposal. What I have put together is a toolkit which basically aids them in writing the investor proposal and understanding what they're bringing to the party, their self-worth, and being able to draw on all the bits of information that we never had at our fingertips when we first started to invest and needed money. So I have put, I think there's 12, I don't know what they're called then, resources, 12 resources in the toolkit. There's a 100 investor objections, which, oh my God, this stumps people. We do this when we do
live events.
Yeah, live events. We do like speed networking, and we use these questions to do the speed networking. It's so much fun, but it gets your brain thinking. And that's one of the big fears as well, actually, for raising money, is being asked a question and not knowing how to respond. So I've already set the questions up for you in the toolkit. So you can actually, at your leisure, go through and answer the questions. So you can take time without being in that situation where all of a sudden, oh my God, you feel like you've been slapped in the face and you just start to crumble. But you can actually prepare yourself for those conversations. And not only have I prepared the questions, but I've given you all the links as well. So this is definitely a do-it-yourself package. This is a done-for-you package. But all the links of where to find all the relevant bits of information as well to answer the question. So that's a big 2 parts of it. So that's massive. I've done an AI prompt sheet as well to build your investor proposal, plus one in the analog method as well, actual pen to paper, how to write your investor proposal. There's how to get yourself visible online, how to actually set all your social media accounts up so that everything is looking the same. It's all congruent, the message that you're giving out. So how to get yourself visible online. There's a worksheet as well for the challenge. Yeah, there's so many bits and pieces in there, but what it does, it just boosts confidence. It brings people together on the weekly challenge as well, on that week as well. We've built a great community already in there.
So we're month 2, aren't we?
Yeah, a great community. And the results that people are seeing just in having the toolkit and 2 months of just being in the network as well have been amazing. They're thinking about the different ways that they're actually networking, about who they're talking to, and they're just, confidence is just escalating
Yeah,
as well.
ultimately, what the resource centre is providing is the ability to address the fears and the objections from the investor before they're asked.
Yeah, 100%. You go armed.
Yeah, so your proposal will negate most of the questions or their fears before they're asked. And
Yeah.
that's the key to it, to give them confidence immediately.
And by writing the proposal, it's that confidence that comes as well. And you realise actually how much you're bringing to the party. We tend to go into these conversations thinking that we need the investor. That if we don't have that particular person, then the deal is going to fall through. But that's not the case. Using other people's money is very much about a working relationship. So you have to see it as a business transaction, that you're bringing something to the party, you're bringing, the deal, the ability to actually take this property and make some money out of it. That's what you're bringing, and you're offering that opportunity to the investor to come on board. So it's very much a working relationship, and it's just about changing the mindset, isn't it? Of that's what it is. It's not about you're asking for money or you're begging, because you do tend to feel like that, don't you, when you first start? But it's understanding actually what you're bringing, and that's what the toolkit and the challenge is all about. And at the moment, it is we've priced it very keenly. So it's just an investment of £27, which buys you the toolkit. But what we're asking in return for you just investing just a small 27 quid is that you actually give us feedback, because we're still building it out. My plan is that in 6 weeks' time, it's actually going to be in a membership area. It's going to be something much bigger and better than it is at the moment. Still the same information, but it's going to just give more people more opportunity to get their hands on it in different ways. And it's just through having our fantastic members in at the moment that we're actually able to get the feedback so that we can make it into something spectacular. So yeah, super exciting. And if you want to get your hands on it, you can get the toolkit for 27 quid. You want to go to moneytreemastery.co.uk. No, moneytreemastery.com/ Nab An Investor, Nab An Investor, and then you'll be able to sign up. You'll get the toolkit. It's got some training, actual me on video as well, so you get some explanation of how to use the information that we provided, and you'll get into the challenge. And then if you continue with us and just keep paying your subscription for £27 a month, then you'll be included in the challenge every month for that week, until the time that you feel like you don't need us anymore. So there's no tie-in. It isn't like you're on a contract. But I can tell you that if you decide to come out, if you buy it now and you come back in August or September, it will be a lot more money. So if you want to help us grow, but make use of the resources that we've put together, then definitely, go on the link, moneytreemastery.com/ Nab An Investor, and get your toolkit.
The numbers are growing very, very nicely, and we've had some really good feedback. In fact, we've had some fantastic Trustpilot reviews, haven't we?
Yeah, it is really, and I'm really excited because I just feel like this has really got legs. So you heard it here first. If you want to be a part of that, a growing movement, because I just don't see there's anything else like that on the market.
No.
So yeah, so I think I've found that little sweet spot. So if you want to be part of it, join us. It's really, really good. As you can see, I'm quite enthusiastic about it.
That is all your work, to be fair. I just turn up and look pretty.
You just make the tea. But I was really inspired actually over the weekend. We spent Saturday and Sunday with big business events, and we had the utmost pleasure of spending our weekend with Jim Francis. So I don't know if anybody has heard of Jim Francis, but he is a trainer.
He's a big name.
He is a big name. He has trained some huge names on stages in the personal development. Oh my goodness, and the biggest one, the name flipping
Not Grant, is it?
escapes my
Not
mind.
Grant Cardone, is it? It's
Oh my, oh,
Robbins.
Tony
Robbins.
Oh my God, how can I
Yeah,
forget his name? Right,
he coached Tony
Coach Tony
from
Robbins.
the age of 22.
Um,
Yeah.
Yeah, so his stage presence, so he's huge. Learned such a huge amount, and that's really inspired me for Nab An Investor as well. So I have got huge plans for that. But get in at the start, and then you can be part of that movement and really help it grow. So yeah, so super exciting stuff. Yeah, how did you find the weekend?
Oh, with Jim,
Yeah,
inspiring really, and it's the little quirky bits that you don't notice that you're planting into people's minds
there's something
whilst you're presenting. So, and it's getting the audience to participate by either a raise of hands or shouting out yes or whatever. So it's constant interaction between you and the audience, which builds trust, obviously. And it's obviously the goal is to get them to say yes as many times as you can, isn't it? And to agree with you. But
we all sat there going like little nodding dogs, even though we knew what was going on. So
yeah,
it was quite funny. But I took so many notes.
Oh, it's phenomenal couple of days, yeah, and such a small group as well. We put it down to the weather because there's a lot of people signed up for it, but there's only 10 turned up, which made it really beneficial to us because we got some real quality time with Jim as a result. So
Yeah, I was really excited actually. There was only a few people in there.
yeah.
So they'd expected, I think, was it 25 people to arrive?
They had 80 sign up. They had 55 complete the form, 25 confirmed, and 10 turned up.
But when I saw just 10
To a
people,
free event.
but with Jim Francis, this
Yeah.
is like, to me, it's like, dude, it's a bit of a non-negotiable.
Do not miss this
Yeah,
opportunity. Yeah.
absolutely. So yeah, so the sun comes out, quite a lot, but Jim Francis, getting time with him, that doesn't happen. So yeah, so definitely took that opportunity. Oh, we've got some exciting stuff happening actually this week. So exciting news, yeah. We are in Blue Bricks magazine. That's
We
something
were,
to celebrate.
yeah, nice feature in Blue Bricks magazine.
So we had, that was one of my goals this year. We were in a magazine, we were in YPN, Your Property Network magazine, a couple of Christmases ago. And I thought, right, it's time we got into another magazine. Been spending time with Adam Stott of Big Business Events, and we paid for some mentorship with ad clients, and Adam would come in and he would be our keynote speaker for the day, and part of him is about branding, elevating your status and really getting yourself out there. And he was saying about getting into magazines, into publications. So I was like, right, that's one of my things, that's a mission this year, and we've done it. Blue Bricks magazine this month, a nice article,
3-page feature.
yeah, on 3 pages. So really, really pleased about that. So, but you just have to just find the people, ask the question, can I be in your magazine? Nobody is going to put you in there unless you ask. Nobody's going to put you on their stage unless you ask. No one is going to sell you a house unless you ask. So you have to be the one driving this the whole time. So yeah, so that's really good. And then me and our VA, Sam, also another goal off the back of having Adam as a keynote speaker was to get some awards under our belt. We've already won 6 awards through Assets for Life.
Yeah, best mentors. We've got of the year.
Yeah, we've got some amazing awards. Having worked for Assets for Life, which we're super, super proud of, but it's very localized. And I wanted to get awards outside of our sort of arena, outside of our sort of little niche, yeah. So I've been working with our VA Sam to get some awards applications in, and we got this morning notification that we'd won a business award. So really, really, really happy about that as well. So that's amazing. So we've just got to reply back and say that we are going to be accepting the award. So yeah, super happy about that. Yeah, and then there's going to be some more more applications going in next month to see if we can get some more this year. So yeah, super happy.
Fantastic. Well done, you and Sam.
Yeah, I know. I know. I did put a message into her saying team effort because she is a massive part of our team. Massive part. So yeah,
You keep
lots of
calling her a VA, but she's real.
oh, she's definitely real. Yeah.
So I think she's a PA.
She's our meet and greet, our networking. Yeah. Couldn't do most of the stuff that we do without her. So super grateful to have her on our team. So, well, I feel like I've rambled a lot today. I'm just really excited.
You are, you're buzzing, yeah.
I know. I can't help it. I can't help it. So if you've got any questions, pop them in the chat. If you're watching this on YouTube, because this will go onto our YouTube channel, which is Jacqui and Neil Dobson Moneytree Mastery. So you can catch up with episodes that you may have missed on YouTube. And we'll always have them in there within about 24 hours of recording. They'll be in YouTube. So we're looking to grow that. So make sure you subscribe and like these videos as well. Because if by subscribing, you'll get notified that the next episode has been uploaded. If you want to keep abreast of what is not only going on with the property market, but also, we are
in the world of the Dobsons. Yes.
We're normal people, and we're just working, plugging away, doing our thing. But we are seeing some amazing things happen. So yeah, so I'm really excited about the coming months to see what else materializes in the world of the Dobsons.
So we've got only a couple of minutes left. What is coming up?
What is coming up?
Yeah.
Oh, I think we've got a bit of a rest next week. But
Following week.
Yeah, the following week we have got our online networking, which is on Wednesday, the 9th of July, at 1 p.m. You can find the registration for that moneytreemastery.com/online networking hyphen online networking hyphen online. I should write these things down rather than trying to remember them. But that is so much fun. Entertaining. We have games, there's breakout rooms, there's proper opportunity to actually make relationships with people, speak to people. This event is not about sitting there listening to us. It's about engagement, about taking part, and really building, or finding new people to work with, collaborating. It's a proper networking event, but we're bringing the in-person network event to online. So it's not about you sitting with a screen off, I'm afraid. You will be interacting with people on the call. So that's coming up. So that's on the 9th of July. So 1 p.m. Register for that.
And on Monday.
Well, if we just do this one, because we'll be back next week.
We will be now.
And we can tell you about
So this is every Thursday.
Yeah,
12:30.
every Thursday. So yeah, if you've missed this one or you want to come on the live recording of the podcast, then every Thursday at 12:30. But
see, Steve's unmuted.
Oh, fabulous. Steve, come on and speak to us.
I forgot what I was going to say, to be honest. There it was somewhere, but just as a final question, did you manage to see that recommendation I gave you, this Brené Brown? Did you have a look at that?
I have, yes. I have started to look at her at YouTube. And I have times where I sit and just purposely.
I think, to be honest with you, I think it's very relevant, but not in a straightforward way. Okay, I think it's very, very relevant to what you're trying to achieve, what everybody's trying to achieve. So I would.
Wonderful, Brené Brown. I'll put that back in my memory banks. Wonderful. Thank you. I love recommendations. I love book recommendations, everything, because that just keeps the old brain matter improving and helps us to improve, doesn't it, and develop. Absolutely. Brilliant. Thank you so much for that, Steve. Thank you for reminding me of that.
All right, that's another one wrapped up.
Yeah.
That's a wrap.
So thank you so much for coming and spending your time with us.
Thank you.
Look forward to seeing you next week or the week after on the networking.
Perfect. Yeah.
Wonderful. Brilliant. Thank you so much.